Hello, everyone. Welcome to the Prosperity Through Multifamily Real Estate Investing podcast. I am your host today, Brian Alfaro, riding solo. Matt and I were giving Cody a hard time, so make sure you all do the same by messaging Cody. But today, I am super excited about our guests. We have Matt Picheny in the hot seat today, joining us for the show. Matt, welcome to the show.
Oh, thanks for having me on.
Absolutely. So, Matt, let me go ahead and go through your background here. You've got an awesome background. I want to make sure we highlight this to our listeners. So, Matt is an active real estate investor, Tony Award winner, definitely a first for the show, and an author of the #1 best-selling book, Backstage Guide to Real Estate. He is focused on developing passive income streams that enable investors to write their own story and choose how they want to spend their time. Matt has over 15 years of experience revitalizing and evaluating communities through real estate investment and has invested in over 8,000 apartments nationwide. He's a licensed real estate agent and has earned both commercial real estate and real estate finance certificates from Boston University. Matt is a member of the Forbes Real Estate Council, the Fast Company Executive Board, and is an advisor to prop tech company. Love to talk about that. A PMI certified project management professional, Matt is a digital marketing veteran who has 18-year career in the advertising world, included working for some of the world's largest advertising agencies, producing award-winning projects for Fortune 500 clients, including Verizon, IBM, and Coca-Cola. I do want to highlight that Matt and his wife have the 2 Tony Awards as co-producers of the Broadway show Moulin Rouge and American Utopia, and have invested in many other theatrical productions, including the iconic musicals Hamilton and Wicked. I told my wife that I was interviewing you, and this little part here, that was her favorite part. So she loves
Nice.
Broadway. You're a native Orlando, Florida, and a former actor. Matt still believes in happily ever after. He lives with his wife and their 2 daughters in Brooklyn, New York. And you obviously enjoy long walks on the beach, and I'm assuming on Broadway as well. So welcome to the show, Matt.
Thanks. You forgot the most important part of the bio at the very end about how I love barbecue.
Oh, that's really important. No, that's it. So we can get into some debates here. Texas barbecue.
We can.
What's your favorite barbecue?
Well, my favorite barbecue is Q39 in Kansas City.
Okay.
I mean, I love Texas. Don't get me wrong. And there's some great places in Texas, but Q39 is my favorite. It really is.
That's okay. We've had some phenomenal barbecue in Kansas City. We went there about a year and some change ago, and I think we ate 3 barbecue restaurants in a stream of a day and a half. So
nice.
Burnt ends, very solid. Definitely love me some Kansas City barbecue, but I'm biased. So I'm going to stick with Texas. But why don't you tell us a little bit more about your background, Matt, how you got started in the commercial real estate investing space, and we'll go from there.
Well, Brian, do you remember where you were in 2001 and what was going on?
Oh, 2001. I was 12 years old. I was in middle school. And I do remember what was going on around that time.
So I was I'm a little older than you. I was living in New York City, and I'm talking about early 2001. I'm not talking about the Trade Center. I'm talking about early 2001. The dot-com bubble had burst. I was living in New York, and I had a digital marketing agency. So not a good time for me having a digital marketing agency when the dot-com bubble burst. All of my clients were going out of business, and my business was imploding. Okay. It was a bad situation. And as luck would have it, I went home to my apartment and I got a phone call from my landlord. And he says, "You got 90 days to get out of the apartment." It was a rude awakening for me, with a business that was failing and needing to find a new place. In 90 days in New York City, I mean, this seemed like mission impossible. Like there was no way I was going to be able to get out of this. I ended up getting a job at Showtime, the cable television channel. They were a client of mine. They offered me a position in-house. So I did that. And I went to look for an apartment to rent on the Upper West Side of Manhattan. It was the place that I had first moved in Manhattan and loved the area and wanted to live there. At that time, my sister was living in Washington Heights, which is about 30 minutes north. And she had seen an ad on a bulletin board for a co-op apartment for sale. After running through the numbers, it turned out that it would cost me less to actually move there, although not where I wanted to live. But I'd be buying something, and everyone always says you should buy real estate. So I did that. And a little over 2 years later, I sold that property and saw my initial investment more than quadruple. And that was the big light bulb moment for me. I had a good salary at that time, but on that one real estate transaction, I made more than I made in my yearly salary. I mean, it was a life-changing moment for me. I said, I gotta do that again. You know, I'm not saying that the money was life-changing. But it was a lot for me at the time. But the impact that made on me was like, wow, real estate is so powerful. How do I do that again? And that set me on the course to where I am now. I mean, that was many, many years ago now. From there, I took the profits and I bought another primary residence, this time on the Upper West Side. So now instead of renting, I owned on the Upper West Side. So I was excited about that. And about a year later, I bought a piece of land in Northwest Connecticut. And a few years after that, I developed that. It was about an acre. I developed it into a single family home, which became a rental, which further set me on the course to where I am now, because you know, I doing that, I learned like literally from the ground up, because it was just a piece of raw land. We cut the trees and dug a hole and poured a foundation. I learned what real estate is actually like made of, like I was there for the whole construction. And then renting it, dealing with tenants, dealing with leases, sure, managing the property. I managed it remotely, which was a real pain in the butt. I lived 2 hours away. I learned a good lesson, which is hire property management company. Yep. But I also learned about the really fun stuff, like accounting and depreciation. So I say fun being facetious, but, you know, learned all about that kind of thing, and learned that I enjoyed investing in real estate. And so I did that as a hobby as I worked through. So after Showtime, I was working in the corporate world, the corporate advertising world in New York, climbing that ladder, eventually became a vice president of an advertising agency. You know, my roles there was on the project management side. I'm a PMI certified project management professional, which just means that I know how to manage people, budgets, and timelines. And so as I was doing that for my day job, for about 10 years of that, I was also on the side doing some real estate deals. My wife got an amazing job opportunity completely out of the blue in Miami, Florida. We moved to Miami. That was a little over 6 years ago. And that's when I transitioned from real estate as a hobby to doing real estate full-time, started investing passively in real estate syndications, and also looking for a deal. It took me 2 years to find my first deal as an active syndicator, general partner. So I've been doing that now for 6 years. We were in Miami for 2 years. We were in Boston for 4 years because my wife's awesome. She got recruited again out of the blue for Boston. And then the company she works for now just elevated her position, give her promotion, and asked her to come back to the Big Apple. So we live in New York City now, back in the townhome that we bought. So after we bought the place on the Upper West Side, I skipped a little part real quick. We were expanding our family. We were having our first kid. We needed a little bit more than the 600 square foot little apartment that we had. So we moved to Brooklyn and bought a townhouse, a 2-family. So one of the units was rented and one of them we lived in. So we've been renting that out for the past 6 years while we were away. And now we moved back into our old place. And so here we are in New York City, living the dream, as they say.
Well, I appreciate you sharing the background. You have a awesome real estate journey and awesome real estate career. We haven't talked about your current portfolio yet. I'm sure we'll get there, but you're buying very large deals now, so to speak. So the fact that you started as, I almost want to call you an accidental apartment owner.
100%.
You were house hacking sort of an apartment, right? You don't hear that very common, where people house hack a duplex or a triplex. You know, they live in one unit, they rent out the other 3. You said, I'm going to house hack an apartment complex, which is a very unique strategy. And it was sort of,
it was a duplex. It's a townhouse. So it was a duplex, yeah.
Got it. Well, that's a great strategy for people getting started, right? Because you get to go in there and your tenant gets to cover some, if not all, depending on where you're at of your rent. And as a young professional going through the traumatic experience of the .com bust, your marketing company really not doing so hot. That was definitely something I would imagine that was a huge pressure release for you not to have to cover that mortgage, which I've never lived in New York City, and I'm sure things are very different from 2001 to now, but I would imagine it was still very expensive.
Oh yeah, I mean, look, the real estate in New York
Yeah,
is one of the most expensive in the country. I think maybe San Francisco is more expensive, but I don't know. But yeah, it's not. It is a lot, and so when we moved into the townhouse in Brooklyn, we were just looking. We weren't looking. I wasn't looking for a two family. I was looking just for one apartment to buy, and
sure.
I almost accidentally came across a listing that I looked at where they had one of the unit, they had a 1 bedroom unit. And I looked at the numbers and I was like, because it was out of my price range, but then if I factored in the income coming from it,
Sure.
it was fine. And that we didn't end up with that one. We ended up with the one that we have now, which is a little bit more than a 1 bedroom that we're able to rent out. But when I looked at this property when we bought it, the rental income coming from the second unit was more than half of what our mortgage payment would be. That was huge. So we were able to move into a place and it cost less for us than if we were renting a place, and it was better, and we owned it, and we had a backyard, and we were able to go ahead and renovate it and do some things that we wanted in the unit. So it made a lot of sense. It was
Absolutely.
it was an awesome deal.
And that's the power of real estate investing. The deeper you go into the rabbit hole, the more you learn about it. And then you start moving into things, which I definitely want to talk about next, like larger properties. So you started off with the small 2-family and started to scale your portfolio. You talked about some single family investments and development that you did. When did you have that light bulb moment on the economies of scale with multifamily, with syndication in particular? And you mentioned that you started your first multifamily, at least the larger properties, as a passive investor, which we always talk about here on our show. And definitely, I'm sure you highlight in your book as well, which we'll talk about the power of getting started as a passive investor before you potentially move on to being an active investor. Because as you and I know, it's a lot of work and it's not for everybody, especially if you're a very busy professional. So when did you have that light bulb moment that the larger, the multifamily, the syndication, the power of the team, the economies of scale was the right direction for you to go, Matt?
When we moved to Miami, my initial intention was to find a job in the advertising world in Miami. It became very clear within the first 3 months that I was in Miami that that wasn't the right step for me for a number of reasons. Number one, the agencies in Miami were much, much smaller. In New York, I was getting recruited from one to another, and I would be managing teams of like 100 people. And I walk into an agency in Miami and there's like 5 people in the entire agency, or 10 people. I mean, the much smaller agencies, there's nothing wrong with that. It was just a very different scale. It was just a very different situation. But more importantly, I was burned out having worked 18 years in New York City. Most of that I was single. So I was burning the candle at both ends, loved it, had a great time doing it, but I needed a break. That was number one. And I just lost the passion for it. I wasn't interested in it anymore. And I'm going out, I'm interviewing at these places I'm not really truly interested or excited about working at. In the meantime, I'm listening to Robert Kiyosaki, Rich Dad Poor Dad. I'm listening to it because it's an audiobook that I was doing at the time. And when I wasn't listening to Kiyosaki, I was listening to Hamilton. Okay, Hamilton had just come out. We had actually invested in the show, but regardless of that, we were just huge fans of it, right? And so that cast album was on constant rotation in our house and in our cars and on my iPad. We just loved it. And so I'm going between Kiyosaki, listening to him talk about developing passive streams of income and going, yeah, I should do that. And maybe I can do that with the real estate thing. And then I'm listening to the cast album of Hamilton. I'm listening to the song My Shot. and Lin-Manuel Miranda saying, I'm not going to throw away my shot. And the whole cast chanting, do not throw away your shot. And I'm just sitting there going, what am I doing? Like, why am I trying to get a job in advertising that I don't want to do? I want to develop passive streams of income. I've done it a little bit. This is my shot. Like, I got to take my shot. And so I did. But when I first took my shot I was like, okay, January 1, 2016, new year, new leaf. I'm a real estate investor. The first 6 months of that was really more in the fix and flip world, buying some turnkey. And these are all things I talk about in the book. The thing I like about the book is it goes through my whole story, right? So it talks about buying primary residence and then buying a vacation rental for short term and then doing a house hack. And it's actually called, like you said, accidental. That's the name of the chapter. It's the accidental house hack. Because I didn't know there was a thing called a house hack when I did it. And it talks about fixing and flipping, and it talks about single family, like turnkey, because I've done all of that. But I was listening to what I affectionately call podcast university in the book. I was listening to tons of podcasts. I was driving around a lot in Miami. I was listening to podcasts, and you guys did not have a podcast at the time. And there was no multifamily podcasts at all. I was scouring the internet trying to find them because I wanted to go bigger. And I heard somebody on a podcast talk about a thing called syndication. And I was like, what is that? What is this syndication? Because I knew that the townhouse that I had bought in Brooklyn, and we still live in it today, it's done phenomenally well. It's appreciated in value. It was cash flowing the past 6 years that we've been away. It's been cash flowing like crazy. If I could have bought another one of those, I wanted to. But to buy a townhome in Brooklyn is like a minimum it's multiples. It's 7 figures. Okay. It's not a cheap investment. And I just didn't have hundreds of thousands of dollars of capital just sitting around in my pocket. My plan at that time when we lived here in Brooklyn originally was to continue working in the corporate world for another, probably for the rest of my life, but, in another 5 or 6 years, I would gather enough money maybe for a down payment on another townhome, and do that. And that's kind of what I thought, maybe over the next, 10 to 20 years, I'll acquire like 3 or 4 of these, but probably wouldn't be enough to retire, but it would like supplement my retirement, right? That's kind of where my head was at. And the only reason why was because I didn't have like a really rich benefactor who had millions of dollars. How would I have the money for these down payments? So when I heard about syndication, I was like, oh, wow, a whole bunch of investors can pool their money together and I can go ahead and invest in a 300 unit apartment complex in Dallas or in Houston or in Kansas City or wherever. And I'm not going to own the whole thing. I'm going to have a tiny little bit. But look, when we invested in Hamilton, I didn't own Hamilton. We have like we have like 0.001%, like a teeny tiny little bit, right? How can I, like, if I could do that, that's really interesting to me. And so it was a guest on another podcast. And so then I went to their podcast, started listening to their podcast, and turns out they had a real estate webinar, not webinar, but seminar, like a live in-person event that I went to in Dallas. And it was like a 30,000 foot view of syndication. Okay. And what they talked about was what syndication is, how it's set up, but not necessarily for apartments. Now, apartments were one of them. They said, you can invest in apartments, and they actually had a guy there who did apartments, and he actually had a mentorship group, which I ended up joining. And then there was like a guy who did assisted living facilities, right? And they had all different, they had a lenders there talking about, they had an attorney there talking about SEC and Reg D and 506B and 506C, right? All the kind of like building blocks that you need to know if you're going to do a syndication. And I met a lot of people. I did a lot of networking. And so through that, and they have other seminars. I go to all their stuff all the time. They're great. And through that, and then the mentorship group that I joined, I started to meet many people who were syndicating deals. I wanted to syndicate a deal on my own also. So I was looking for that, but I had some money I had saved up over time from the back in the real estate deals. Back in the advertising days. Sorry, my tongue got tied there for a moment. So back in the advertising days, I had been saving some money. And so I started to use that and deploy that capital into deals as a passive investor. And the reason was twofold. I mean, first and foremost, I wanted to invest in these deals. They seemed really good. They seemed like great investments. But secondly, I thought, hey, listen, if I invest in these other people's deals and this is something I want to do actively, I can learn. I can learn from those deals. I can learn what to do. I can learn what not to do, because I've never done these before. I've done real estate. I'm really good at managing projects. So I feel like I would be good at this. I can sort of take that project management experience and my real estate experience and combine the two. And so that's what I've done. But it was very interesting to me to invest passively in these deals. And I did not do a very good job on the first few deals that I invested in. I didn't lose money, but I didn't really make money. And so I learned a lot of lessons. And, one of the things that I've tried to do is, I like to sort of add value. And I realized through the course of writing my book that I've actually done that on every just kind of inherently in all the places that I've been buying throughout time, like even from that first apartment. And we could talk more about that in a moment. But another way that I like to add value is just like help people and like share knowledge. I mean, it's not just like the actual like nuts and bolts of like adding value, doing like a value add on an apartment. I'm talking sort of a little more aspirational. And I love helping people out. And I had a meetup that I ran in Boston when we were there, and it got really big. And a lot of people, started learning about syndications just like I did and want to invest in syndications just like I did, and come to me and say, Matt, I know you've done a bunch of these. I know 2/3 of your portfolio are passive investments and 1/3 you're active in. So you see things from both sides. And heck, you're the host of our meetup group. You understand syndications. Will you look at this deal? Because like this, I'm talking to this sponsor about this deal. I don't really know the sponsor that well, and I don't know how to look at this deal. And I said, sure. And I sat down with them and I look at the deal and give them some things like, hey, I don't know, 30% rent growth every year for the next 10 years. That's probably kind of aggressive. I mean, I never tell people to do a deal or not to, but just point things out. As the meetup grew, got to a point where we would have over 100 people at every meeting. More and more people would ask me for my time. And quite honestly, I was doing my own stuff. I didn't have enough time to give to everybody as I wanted to. And that's when I wrote a little 70-page handbook, which ended up, had all this different information. And it was just really dry, really condensed, and the most boring thing you've ever read in your entire life. I mean, it was like chewing cardboard, I say, because it was really bad. But I took that and spent a lot of time and took that information and spread it out over the course of my journey. I have a unique journey, having been in real estate and then digital marketing. And I wrote out the narrative of my journey and share with the reader the keystone concepts that I learned along my journey. So in the earlier parts of the book, we start off with when I learned what the difference was between an asset and a liability. And then by the end of the book, for people who are more seasoned, like even you, Brian, I don't know if you know the ins and outs of an air rights deal. That's one of the things I talk about, an air rights deal that I did. I talk about a 1031 exchange. So for more advanced people, there's still good stuff. And throughout the whole thing, I share those 18 different keystone concepts. I also have 60 different real estate terms that I define in real world examples, throughout the book. So it's an educational book, but it's a fun, interesting read. I try to inject a lot of humor in there so that it's a lot of fun. But this book, again, is me sort of trying to add value and give people tools to know how to look at deals, how to vet deals, so they don't go through the same mistakes that I did when I was first learning all of this.
Sure. Well, wow, you've had a great journey, Matt, and I definitely appreciate you sharing that. And I think the big thing that I take away from that, you started in January 2016 and really started on the smaller side. You were doing the single families, the fix and flips. And then you had that sort of light bulb, that epiphany moment where somebody introduced you to syndication. And I think part of your success, and correct me if I'm wrong, is you really spent a lot of time networking and educating yourself. And this is something that we really talk about a lot on the show to both active and passive investors, but especially, passive investors that don't know how to evaluate the deal, right? They don't know how to evaluate the sponsor. There's not that relationship there. And they might be very, very educated. They're engineers or doctors or lawyers or in a particular field, but real estate investing is very foreign to them. It's something they've never done before, especially if they're, passively investing. So I like the fact that you went out and you sought mentorship, you sought education, and then you went and decided, you know what? I need to learn the ins and outs of this business. I need to get a peek behind the curtain, so to speak. So I'm going to passively invest to kind of see how this goes, because when you sit on both sides of the table and you understand the passive side of the table and you're not just an active investor, you really start to think like a passive investor when you're evaluating these opportunities. Because when we're taking people's money we're a fiduciary of their capital, we have to be conscious of the things that they're concerned about, the type of deals that they're looking at. And even though you mentioned those deals didn't go so well, you learned a lot, and the education is arguably just as valuable as the money that you made, or hopefully you didn't lose, but maybe didn't make as much as you hope. And it's kind of pushed you into the point where you did that first general partnership as your own as well. So any other points you'd like to highlight in that? But that was my big takeaway from that: is education's key and networking.
Yes, I couldn't say it better, Brian. I mean, the networking is, those relationships are super important, especially most of these deals. There's a lot of good deals that are 506B, so you have to have that pre-existing relationship. But even if it's a 506C, you have to know who the syndicators are. So that's number one. Number two, education is of the utmost importance. I went ahead and did education through mentorship. I did education through course of studies. I have 2 certificates from Boston University, but also the education that I got from passively investing. That was education. I mean, it wasn't, I wasn't underwriting deals. I was reviewing someone else's underwriting, but I learned a lot from that passive investment. And so I invested passively in 5 deals before I sponsored my first one.
Well, I definitely think, we can all get analysis paralysis on both the active side and definitely on the passive side too, where you're sort of scared to take that first leap of faith, right? You meet a sponsor, you have a great conversation, you feel like there's some connections there, and you like what they are doing. You like them as people, because we always say you bet on the jockey, first, then the horse, right? The people are just as important as the apartment building, if not more important. But then you start seeing they're sending you deals, and you don't invest, not because maybe they're bad deals, but just because you're just, I don't know, you talk yourself out of it, right? You just feel like it's not the right one. It's not the right one. And you never end up taking action. But the best way to build wealth in real estate is to buy something. You have to buy something. If you never buy anything, if you never invest in anything, you're never going to be able to take advantage of the passive income streams, the appreciation, the amazing tax benefits that come from it. So you took that first leap of faith with that sponsor that you built that relationship with, and that really opened the floodgates for you to where you said you invested in 5 deals after that. And was it 5 deals before you did that first GP deal, or was that GP somewhere right after?
No, so I did 5 different deals with 5 different syndicators before I did the first deal that I sponsored as a general partner. At this point, I'm in over 25, syndications as an LP, and some of those have gone full cycle. I'm in 25 currently, but there's been other ones that have already full cycled out. So, that's
I love
part of my portfolio that I still grow. I mean, I still do. I'm on y'all's mailing list, right? Because I'm looking at your deals to passively invest in one of yours, because I think that I want to continue to grow my passive investment portfolio.
Absolutely. And I think it's smart when you're getting started. We talk about diversification out of the equities market and different things as well, but diversifying between sponsors as well, especially when you're new in this business. You just don't know what you don't know. And you really can't really get a peek behind the curtain until you invest, right? So diversifying your capital. You know, if you have $100,000 to invest, maybe putting $50,000 in two separate deals from two separate sponsors. Maybe one's an A class, maybe one's a C class. You can start to diversify and kind of see what's out there. But that's definitely something we advise our passive investors who are just getting started as well.
You know, out of those 5 deals, they've all gone full cycle. 3 of them, I wouldn't invest with those sponsors again. And it really doesn't have to do with the returns, because one of them had phenomenal returns, but the communication was so bad. And but there's a number of reasons why, but for a number of reasons, I won't invest with. But 2 of those syndicators, I'll invest in every single deal that they have if I have the capital, because they were great. And so there is, I think, a little bit of trial and error. And by the way, the 2 syndicators that I would invest in any of their deals again, one of them did really well. One of them did, it was okay. You know, it wasn't great. It wasn't like a home run, but you know, it was fine. But they were great sponsors. You know what I mean? Great communication. I really felt comfortable with them, that I knew what was going on. That's the most important thing, I think. I talk in the book about the 3 deal pillars that you need to look at when you're evaluating a deal.
Sure.
And they're the sponsor, the market, and the deal itself. And the most important is the sponsor.
Absolutely. Absolutely. Yeah. Well, I want to talk a little bit about let's do a little bit of a case study deep dive in here. Let's talk about your first GP opportunity. Walk us through, you know, how you got into that opportunity, where you were able to add value, and kind of give us some highlights on that first opportunity for us.
Well, I was searching for a while for that first opportunity. I'll spare you all the details. I'll just cut to the chase.
So it was 2 years, right? 2 years.
2 years and several different markets. You know, I ended up looking in Kansas City. Why Kansas City? Well, when I used to be an actor, I did a show in Kansas City one summer, and I was in the early side of my mid-20s and was very naive and thought that I was going to be going to Kansas City and really bored sitting around watching like corn grow or whatever. And I mean, I couldn't have been more wrong. You know, Kansas City is a very metropolitan city. It was awesome. I had like one of the best summers of my life in Kansas City. It was fantastic. So I've always had a soft spot in my heart for Kansas City ever since then, probably because I just, you know, had, you know, naively just had really low expectations. I don't know. I just thought, I think it's awesome. I love the city and I love the people there. I met tons of people there and loved it. And so one of my best friends ended up moving to Kansas City for work, and I was looking for another market. You know, I had looked in a couple of markets. And so this guy was my college roommate. I mean, he was in my wedding. Like, we're really, really tight. I'm tight with his wife. We all went to college together. I know his daughter very well. It's just basically family, right? Extended family. So I went to Kansas City I started, you know, online meeting with some brokers and property managers and started looking at some deals, and they looked like they penciled out. And so I went to Kansas City for a week and met with people and property managers and brokers, and just kept doing that. You know, every quarter or so I would go and I was looking at deals, and I would do property tours, and things got close, but no cigar. And then eventually I found there was a property I really liked, and I had a property management company that I had met with that I really liked. And so, you know, what's recommended for most people, right, is once you get to a point where you're about ready to make an offer on a deal, you should really review that with your project management company to make sure everything looks good, expenses, rent growth wise, you know, just to have someone, because they're ultimately going to be the people who are responsible to execute on that business plan. So I'm reviewing it with the property management company, and it's just, you're like, yeah, that's not going to work, you know. So another deal down, that's not going to work, and I was kind of discouraged. And the property manager, the regional that I was talking with, she was like, you know what, man, we have a property that we manage, and it's in Lawrence, and they're looking to sell the property. They're going to be putting it on the market. It's not Kansas City, it's Lawrence. But, you know, would you like me to introduce you to the broker? And I said, sure. So Lawrence, for those who don't know, because I didn't know at the time, it's between Kansas City and Topeka. It's its own MSA, and what it's really known for is the University of Kansas is there. And if you're into basketball, that's the Jayhawks. They usually make it into the Sweet 16 for March Madness. I'm not a basketball person, but if you're in Lawrence, you got to go to a game. It's friggin' amazing. The crowd goes crazy. But I started looking into it, and the market was good. A lot of people love Kansas City and Lawrence now, and I feel like prices have gotten inflated. I mean, I've sold everything that I have there now, but at the time it was kind of overlooked. And this broker was somebody who doesn't do a tremendous amount of transactions. I didn't know who they were. They weren't on my radar. So luckily the property manager knew about it and made the introduction. This is, by the way, is a whole chapter on this deal in my book called Sunrises in Kansas, because the properties are Sunrise Place and Sunrise Village. And so that was these properties that they had managed, and they went on the market, and I put in an offer, and my offer was too low, and everybody's offer was too low. And they actually took the deal off the market. And behind the scenes, I just kept chipping away at it with the broker, and eventually got the deal off market. And so, I had this deal. I had some confidence that I could raise some capital, but I didn't think that I could raise all that I needed. I needed to raise $2.6 million. So that was kind of a big raise. This was a $10 million property, 132 units. And so I had a real estate buddy, a guy who was in the mentorship group that I was in. He was actually a coach. He wasn't like assigned to me as a coach. We just became friends because both of our parents were in the food service industry. And there was just like a commonality that we had, and we just started chatting. And so I asked the guy, hey, take a look, tell me what you think of this deal. And he's like, this actually looks like a really good deal. And I was like, hey, do you want to do it with me? And he was like, yeah, sure. So now I had a guy who had done 10 deals as a syndicator on my team as my co-pilot. I raised about 75% of the capital. He raised about 25% of the capital. So I wouldn't have been able to do the deal without him raising the capital. But also, I don't think I would have been able to raise the amount of capital that I did without being able to say to my investors who knew me as a business guy, and I think had faith and trust in me, and had seen me doing real estate as a hobby for 10 years and passively investing in these multifamily syndications for 2 years, to say, hey, look, I've got a co-pilot who knows what he's doing. He's done 10 of these before. I think that just kind of, anyone who was on the fence kind of put them over the fence. And so we went ahead and we took the deal down. And, look, I ran most of the deal in terms of, the acquisition process. I mean, he was there for due diligence. He was involved all the way through, but I really took the lead, and he was more of an advisor. Still involved. He put his own money in. He oversaw everything. I checked everything with him. He gave input. I ran into things that I didn't know about. Call him up. Hey, Justin, what do I do about this? And he said, oh, we had this on this other deal. Here's what you do. Right. So super helpful. And then when we were running the deal, he was on a lot of the asset management calls at the very beginning, but I think he realized pretty quickly on that that's just my strong suit is management. And so he started to, appear on them once in a while, and he got the weekly reports and everything. It was keeping an eye on everything. But that was fantastic. And I've actually now done a number of deals with this guy, and there'll be deals that he's more active in, and I take a little bit more of an advisory type of role. I'm still involved, and on the weekly calls and all of that. And so we sort of trade back and forth based on what our bandwidth looks like. So like the last deal that we just did together, he took a little bit more of the lead on the asset management. And this new deal that we have that we're closing in another week or two, I'm going to be the lead on the asset management on that. We kind of like tag team on that. It's a really good yin and yang that we have, and we have skill sets that I think really complement each other very well. He's a little bit more bigger picture in strategy, and I'm a little more like very detail oriented. I'm almost OCD. I like all my things to line up perfectly.
Sure.
My wife makes fun of me. I eat Skittles. I get Skittles of Skittles. And I put them in piles by color, my reds, my yellows, my greens, my purples, and she laughs her head off. That's how I like to eat my Skittles. And I save the reds for last because I think they're the best.
Well, there's nothing wrong with that. Well, the couple of things I wanted to highlight about your story that I think are really important for our listeners, both active and passive. One is just the power of partnerships, right? This is really, really important in multifamily because these deals, while some people probably can do them on their own, there's no reason to, because it's so much work. There's so much stuff going on behind the scenes that people don't see. It's important to go out there and find good people you want to work with, people you want to talk to on a daily basis about sort of the ins and outs, what's going on with these assets. If you're a passive investor, I love the fact that you found somebody to give your investors confidence on your first deal. You went out there and you found that active partner who had that track record. And that's something we really preach and we've done as well on our first deals. We always wanted to strategically align with somebody who had already been there, done that. That gives investors a lot of confidence that if something does sort of go in the wrong direction, there's somebody, sort of a safety net there. There's somebody who's done that, who can guide you. And we always encourage our investors, look at the sponsorship team, figure out who on the team has a little bit of background and experience, and that can give you a lot of confidence. It doesn't mean don't invest with new sponsors, because we all start from somewhere, but getting their background, getting their experience, what they've done in the field is really, really important. And on the active side, it's the same, right? You want to find that person to complement you. If you're really good at asset management and that's your bread and butter, you love asset management, then go find somebody who's really good at raising capital, or vice versa. If you're really good at raising capital, but you're not that good at finding deals, go find that person who's good at finding deals. And if you guys form a good partnership, I don't know how many deals you've done with this partner, but it sounds like you guys have a lot of history together. A lot of good things can really stem from that if you're somebody that other people want to work with.
Yeah, we don't have an exclusive relationship with one another. I've done one deal that he hasn't been a part of. We really enjoy working together with one another, and exactly what you're talking about, partnerships and finding partners who know more than you do. That's actually keystone concept number 15 in the book, right? So it's super, super important.
Awesome. Well, we're getting towards the end of the show. I want to talk about one last thing, and that's the book. So we talked about, a lot of highlights, a lot of points in this book. Tell us a little bit more about the book, who you think the book is best suited for, and then definitely where they can pick up a copy of the book as well.
Okay. So it's called Backstage Guide to Real Estate. The subtitle is Produce Passive Income, Write Your Own Story, and Direct Your Dollars Toward Positive Change. And so it's really, the hope behind this is that people are going to be able to use this book to produce passive income. And that will allow them to write their own story, which is, I wrote a whole article about that in Fast Company about writing your own story. And that's what I'm doing now, right? I'm writing my own story because I have this passive income. It gives me the freedom to do that. And then the last part is directing your dollars towards positive change. Every deal that I'm involved in is a win-win. It's a win for the residents. We make life better for the residents, better for the staff, and better for the investors. I'm not running a charity. We make a profit, but the bottom line can be more than just about dollars and cents. And I believe that you can do well by doing good and be an ethical business owner and still make a good profit. So I'm hoping that people, as they're writing their own story, will be directing their dollars towards things that are positive in the world. And so you can get the book everywhere that books are sold. But I would direct people to go to my website, which is picheny.com. It's P like in Peter, ICHENY.com. There's information on the book there. There's links to buy it, like on Amazon. I also have a really great newsletter that has investors tips and tricks. I have a blog with lots of real estate investment education. And so the book is really for the busy professional who's out there doing things and maybe has done some real estate investment or wants to, because the book really tells you how to look at those deals. The first 208 pages are the narrative, and then the last 50 pages of the book are called the Backstage Toolbox. And it's got questions to ask sponsors about themselves, about the deal, about the market. It really gets into the nitty gritty. And that, I think, a lot of times people will read a book, like a book, and pass it on to a friend. I don't think people are going to pass this book on to their friends, not because they're selfish. Maybe they'll buy their friend a book, but I think this is going to live on people's bookshelves because it does serve as a reference. All the 60 definitions that I talk about in the book are all referenced in the back. It's a glossary, but it's also an index to the chapter where I told the story about that. So it's something that I think people are going to be able to use for years to come as a resource.
Perfect. Well, we've been talking a lot about being educated on this show, and building streams of income is obviously important to our listeners. So definitely want to encourage all of our listeners to pick up a copy of the book, go out there, read it, and connect with Matt as well too. So a couple questions for you before we get out, including how do people connect with you? But first one is, what do you do for your continued education to further your investing, Matt? What are you sort of doing on a daily, weekly, or monthly basis to make sure you stay in tune with what's going on in the markets?
Well, I listen to podcasts like yours. I read a lot. And I'm also a part of 2 different mentorship groups, and I'm also in a mastermind. And once in a while, I did, several years of education at Boston University. I haven't done any formal education lately. Maybe I'll do something at NYU or something at some point. But I think staying educated, staying on top of what's going on in the markets is of the utmost importance, whether you're a passive or active investor.
100%. I agree with that. The power of masterminds and surrounding yourself with people that are on your level and then even smarter than you. I like saying I like being the smallest fish in the room. I want to be the dumbest guy, so to speak, because you're going to be surrounded by better people. That sort of a rising tide lifts all ships, right? So,
yeah.
And then next question for you is, what advice would you give to the listeners to help grow their business?
Well, it depends what their business is, but like when it comes to the real estate, you had kind of touched on this a little bit earlier, but I've heard other people say this, and I say it all the time too. When people say like, "What would you have done differently?" I would have invested more, and I would have invested sooner. So it's not timing the market; it's time in the market, as they say. And so I think overall. And who knows, the paradigm could shift, but overall, since about the dawn of time, real estate's been a really great investment, has gone up in value over time. So I think investing in the right deals, the book will help you do that. Invest now, and I think it will help the growth.
Absolutely, I agree with that. And final question for you is, tell the listeners how they can get a hold of you. What's the best way to reach you, Matt?
Oh, just go through the website, picheny.com. There's a contact page. There's actually a link to my calendar at the bottom of the homepage. You can schedule a time to chat with me if you want, or shoot me an email, give me a call, whatever you want to do. But I love talking with people about real estate. If you're an aspiring syndicator, or maybe you have 1,000 doors, I don't know, whatever level you are, passive, active, it doesn't really matter. I just love talking about real estate. So feel free to reach out.
Awesome. Well, Matt, I definitely appreciate you being on the show. We appreciate you sharing your story and your knowledge, and I'm definitely looking forward to getting a copy of the book myself. And I'm encouraging our listeners to get a copy of the book. And I'm going to definitely give Cody a hard time for missing this interview.
I can't believe he's not here.
I know. That's hilarious. Well, we appreciate you being on the show, Matt. We look forward to having you again on the show sometime soon. Go out there and crush it.
Thanks. It was a pleasure. Thanks for having me on.
Thanks, Matt.